TFNN. Headline News Update.
Good afternoon, folks. Steve Rhodes coming to you live from sunny Delray Beach, Florida. This is your 1 p.m. update. Currently, we've got a mixed bag out here. The mixed bag is you've got the NASDAQ 100 and the NASDAQ Composite trading lower, down by about 0.6% and 0.25%. Otherwise, all the other indices are in the green. You've got the Dow up nearly 200 points, the S&P up 9, Russell's up 25. That's the big winner. Chicken dinner up nearly 1.7%. Gold's up $7, silver's up 3 pennies, light sweet crude is up nearly $2, a big move there, about 5% to the upside. So let's begin by taking a look at the S&P 500. As we take a look at the cash indice out here, here's what we know. We know that price pulled back and tested its breakout level, did that last Friday, tested and rejected it. That was at 33.2644. So that signals to you and I, you can't bust them down, it'll try to bust them up. Bust them up means where is resistance? On the cash indice for the S&P 500, it's up at 34.49. Now that number's going to change as price moves up or down, but use that as your basic guideline. So the daily chart for the S&P 500 cash indice suggests to you and I that price is headed up towards the 34.49 level. If we take a look at market breadth for the S&P 500, let's go ahead and pull this over here. Now here we're going to take a look at 4 different time frames. You'll look in the upper right-hand corner. I'm sorry, this is for the NASDAQ, but let me get it for the S&P. And for the S&P 500, you'll see a weekly, a daily, a 240-minute, and a 60-minute speed dial. Right up here in the very right-hand corner. You'll see that each of these are in the green zone. The green zone says that we have bullish crossovers. That means there are more instruments for each of those time frames trading above the top of their box, which is resistance, versus those down below the bottom. So we have market breadth from the S&P 500. It is market breadth bullish. Let's go take a look at another market breadth tool out here. That would be the spot volatility index. As we take a look, and we're just focused here on the S&P 500. Spot volatility index, the lower left-hand bottom chart out here, is trading below its 50-day exponential moving average. That number is 26.52. Again, that number will change up and down, but we're trading at 25.48. So well below that area. The reason that is so important is simply because when the spot volatility index is trading below its 50-day exponential moving average, you just simply look to the green boxes, rectangles that are on my screen out here. This is what the S&P 500 does at that stage of the game. Folks, I can't believe we're out of time. But stay tuned for the Trader's Edge show, because to complete this task, we have to go take a look at the equity futures contracts and understand where in the ES Mini resistance is. Steve Rhodes with TFNN. Have today's a Wednesday. Have a wonderful Wednesday. Stay tuned for the Trader's Edge show. Otherwise, have a great day.